All right, guys, here's a real-time example of how you can use macro and then micro structures to have a better understanding and trade setup for the future. So what do we have here? I already created a video. This is a distributive structure right here. And the price target is basically right here, right? It would technically be lower here, but I would say probably right here. You know, to be safe, I would say just basically right there as well, right? It could technically go all the way to down here, but there's a lot of resistance here, and I think this trend line will maintain the massive trend line, which actually starts from here if you know, create it. But it is what it is. Doesn't have to be perfect. So, microstructure, distribution. Once it dumps to here, as shown by this fractal, it could go back up into larger overall reaccumulation. So that's how I think it will play out, and I think this will be the stop. There's a lot of confluence in general. This would be the top. If you look at it, this would be the top of this bottom accumulation range, which I'll talk about in another video, and this diagonal, so you find a confluence point, as well as just the overall end of the projected target price of the distribution. So we're in the midst right now of perhaps it breaking down, or it might just shoot up a little bit and create basically the first Wyckoff distribution pattern, the first schematic, as opposed to the second one. Right now it's falling into the second one, where it coalesces around this area and goes, as opposed to breaking out of the trading range, which is here, and it makes a new high or gets close to making a new high and then goes down. So nevertheless, right, we have here, we have the buying climax, and we got the AR. These two bounds are extremely important and creates the trading range in which we're going to be in for a while, right? You can have a secondary test here, and then this one would be the up thrust. So let's show that as it is. This is the secondary test. Up thrust, which leaves the trading range. It's the key point. It has to leave the trading range, otherwise it is not valid. Let's turn off all these just to be able to see better. This is the U tab. All right, we'll put question marks because we don't know whether it's going to stop here or go up a little bit more. How do we take advantage of this? Well, if this goes up, then you want to short once it passes into this. Ideally, if it goes back and tests it and goes down, that would be the perfect place. But sometimes it doesn't do it. It just kind of rips through it. So the second it goes through, starts scaling up. The second it breaks this bottom one, again, hopefully retest, that's the best one, you add much more. And then you can scale out of your trade as it goes down. That's how you would play this. Now, what would happen if this plays out? Well, this is a type of reaccumulation that I see often, and it's the one with the spring. We're talking about the macro structure now. This would be the spring after the mini distribution in the middle. And this would wipe out all of this liquidity here. And then it would go up and then create this creek. The creek concept is very important for reaccumulations. They almost universally all have them in some form or another. This would be a very bullish type of reaccumulation structure because it breaks through the trading range completely, slices like butter. There's other ones that look more like this, for example, where it might just go down like this. Let's get rid of this fully. It might hit this bound, maybe even go a little further, but mostly hit this, and then it might create that creek, which is just a grind down of price to the point where it's almost vertical or horizontal, right? Almost a cup pattern. and then it would shoot off, right? So there's three variations. The one where it goes underneath creates a nice spring to wipe out the liquidity. There's the one where it just kind of creates that creek within the trading range. And there's the one where it goes much above and then creates the creek on top of here. That's kind of the best one I've seen. It's a very bullish pattern because it never re-enters this trading range. So depending on which one it is, you have different ways to play it. I think this distribution is almost guaranteed to fill out, to basically hit its target price. After that, we'll see what happens. It'll have to be the spring if it does play out, right? It would have to be the spring variant where it goes under, wipes this out. And that spring might hit here because there's a lot of confluence here. But if this isn't an actual distribution, it's an actual reaccumulation, then you'll see the creek start forming here, right? If we get the spring variant of the reaccumulation, it'll kind of look like this already took place, so you don't have to worry about it. But if you play this as a distribution, the place where you have to worry is if you start seeing price do this, right, not leave this trading range and just take much longer, because these things tend to be pretty symmetrical, right? You need this amount of time. If it ends up like looking much drawn out and stretched out, it'll add weight for it to be a reaccumulation. Or if you see it break through and not break down into the trading range, right, when you have this first schematic, it'll break through naturally and it'll start grinding down like this, but it'll get into the trading range, then collapse quickly. If you see it go up and just kind of do this, it's bad relative to your trade if you do a short. So this is kind of how these reaccumulations work. I'm sorry for the long, the really long video on it, but there's a lot of little details you have to learn. And the creek is a very important details with reaccumulations. It sort of always forms in some manner. Sometimes less so when it's this spring variant, but it almost always forms in some manner. So we'll look at other points when they come up with different structures.